like I say a lot, and I'll say it now, it's one thing to get on the right side. It's another thing to stay off the wrong side. Your goal is to do both, get on the right side, but stay off the wrong side, not to get picked off, not to be fighting the market. You could fade it, but you shouldn't fight it. What could keep you off the wrong side? In the pit back in the day, it was called getting picked off. You're bidding threes, and as soon as you say three bid, they all say sold. And now it's at two, and they're off to the races, and you feel like a dummy. And there's nothing worse than feeling like a dummy and being down money. So, what could have kept you from being stuck long on this big break? When I say this big break, take a look at it up here. There's a pretty sharp decline. All right. Everybody says, how can I get short? If I sold it here and I bought it there, they start doing the math. First things first, what could keep you from being long? What could keep you from getting picked off and having it run against you? Now you're chasing it, and it gives away 2, 3, 4 days, a week worth of profits. What could that be? Well, let's take a walk back and look at what we like to look at, and that is our OPP. These two numbers right here, 60 minutes, it's pretty balanced. Over the last 2 minutes, pretty balanced. The shorts, slightly more shorts, which is slightly bullish than longs, but then watch what happens. If you're watching this, you perk up right away, and that's what we do in this group. Watch it. It goes from little short, a little more short than long, to balanced. Just watch these two numbers. Watch them. Boom. First it flips, little long, back to balance, little long again, 75.56. Keep watching. Laser went green. Bigger long came in. Boom. Real big long came in at 23.5. Laser jumped. Markets fall out of bed. It's not just getting on the wrong side. It's not just getting on the right side. It's staying off the wrong side. It's not just getting on the right side. It's staying off the wrong side. And then you could go in that instance, really from bullish to bearish. When you see that kind of flip, you've seen that dynamic change in the market. When people want to talk about value and they want to talk about profile and how it creates value, maybe not. But what creates value, in my opinion, is where people are willing to get long and willing to get short, willing to put their opinions and attach money to their opinions, money to their ideas. And if there's longs opening up and they think there's value in the 23, 24 area, they think it's cheap. Because think about it. Anytime you buy something, you think you got a good price because you think you got it cheap. That's a good word to use. When you buy something and it rallies in price and you made money on the position, so you bought it cheap. People think it's cheap. And when it's not, is when you get the big move down. When people think it's cheap, they act on that idea and they're dead wrong, is when you get the move down. When people think a market's expensive and they're wrong, is when you get the rally. You have to start thinking opposite of what conventional wisdom is. And a lot of people get stuck thinking conventional wisdom. They want buyers when they're long. The type of buyers that you want when you're long is different than what you thought. It's the type of buyer that you want. You don't want other people buying and being long. You don't want people buying and getting filled when you're long. You want them trying to buy and missing it. But all of that goes into what could you see with the tool that we have. It looks like, again, there's a lot going on here. It's not. These are just different time periods on the same information. It's really the simplicity of being able to see other people's positions through the MBO data. Nobody else has it. Not just we tell you where stops come out. We tell you what stops are used for and how it exits other people's in their positions. We tell you when people open a long and open a short. You see it in these colors over the last hour, over the last 2 minutes, and over the last 15 and a half hours. So when you see this big move lower, you need an edge. You need an advantage. So the randomness gets stripped out.